Well, to talk about lending in that space, we're joined by Frank Donnelly from MA Financial. Frank, g'day.
Hi, Andrew.
All right, so when you take a look at traditional credit and then apply it on the blockchain, how are you looking at what's going on at the moment and this contagion?
Yeah, well, Andrew, I am a traditional credit and finance guy. So
Yep.
the way I think about this is that finance is a confidence game. And the system relies on having trusted counterparties that you can trade with, that you can store assets and wealth with, that you can lend to and borrow from. And there are certain sacrosanct principles of finance that underpin that. So for example, customer money should be ring-fenced and not used for speculation without their knowledge. There should be governance and controls and some experienced, sensible heads to keep things under control, particularly through volatility. And finally, that the push-pull of regulation is there to keep things stable. And I think the FTX fallout, but it's not just FTX, it's things like there's been the collapse of Celsius, Terra Luna, 3 Arrows Capital, Voyager Digital, and then obviously the more recent things with BlockFi and Gemini and its Earn program, which is really just lending in a particular way, have in fact impacted the credibility of these technologies to be used more broadly for through the financial ecosystem, I think.
All right, but do you see the merit of using blockchain when it comes to traditional finance? And given the setbacks we've had in the sector most recently, how is this likely to affect investors and financiers in that development?
Yeah, look, it's a good question. I guess the proponents of decentralized finance, or DeFi, would probably say that the problems we're seeing now are actually a function of centralized exchanges like FTX having too much power, and that if this was done on a decentralized protocol with smart contracts where it was automated and no intermediaries, then maybe these challenges wouldn't have emerged, and perhaps capital should be allocated there. I think there are some challenges with that argument because the benefit of having a trusted intermediary in a system is that it enables access to finance to be sort of user-friendly, scalable and accessible, and that's a bit hard. It's not really realistic to expect people to do self-custody and so on. So I think the better approach to leverage these technologies is to develop tech that can, for example, provide an immutable record of ownership and title that can be used to enhance transparency, and that can help to provide an audit trail for transactions, and that could be used in the traditional or the real world of finance. As I said, it enhances trust and confidence and transparency, and you could partner with established pillars in the financial ecosystem to deploy those technologies. And there's probably a few examples there that we could talk about, real world examples where that would be really valuable, actually.
Well, okay, give us those examples, but also what you're doing at MA Financial. Are you actually investing, or at least involved in the blockchain in terms of lending and managing money?
Okay, well, look, at the moment we are not. And the reason is, look, we would not lend to borrowers whose activities really are engaging in either speculation on very volatile assets or alternatively making markets for speculation of volatile assets. But the use of these technologies throughout the financial ecosystem and marketplace is something that I'm very interested in, and I think we can be very interested in. So let me give you an example of that. So if we think about something like asset-backed lending, this is a type of lending that's often done through a process called securitization, sometimes but not always. So, and for your viewers who aren't familiar with it, securitization is basically the process of collecting a whole bunch of loans and assets, pooling them together, wrapping a financing structure around that, and that allows you to sell bonds to investors, some more senior and less risky, some more junior and higher returning, but you can customize them to investor preferences. Now, in that process, you need to know that the loans and the assets that you think you've got security over, you in fact have the title to. And the finance industry today largely runs on spreadsheets for this kind of thing. So you have to do things like independent data audits, sample testing, but there's thousands of assets in these type of collateral pools. You can't look at everything. You can try and enhance with data analytics. But if you had something like a blockchain technology around that, where you could have an immutable record of where those assets are, their provenance, their ownership, then that would greatly enhance the quality and the confidence that investors would have in investing in that asset class. And it's that sort of thing,
Yeah.
either backing those technologies or investing in credit, other types of asset where those technologies are being applied, that I think is really interesting and would be super disruptive and innovative.
All right, so that's to the merits of using blockchain, but of course it's not an easy transition. The technology is still developing, and we see the problems, of course, with the ASX. It's trying to replace the CHESS system, and well, that's been put to the side now after certainly a couple of years of trying.
Yeah, look, I think deploying new technologies is always hard. When we have technology enabled many parts of our businesses, some of our emerging lending platforms and so on are effectively technology platforms, technology marketplaces in their own right at large scale, and they deal with huge amounts of data. And every time you do technology upgrades or you invest in technology processes, there is always a risk to that. And that was seen early in the evolution, for example, of the internet. But the fact that there might have been, pets.com, or there might have been some strange uses by traditional companies of technology and the internet in the early days didn't mean that the long march of technology adoption didn't ultimately come to fruition. And I think that if these technologies can be used less for speculation and more for creating efficiencies and enhancing the transparency and confidence investors and users of finance, even retail users can have in the financial markets, that would be hugely valuable and I think really exciting.